Welcome to the Private Practice Startup, where we inspire you from startup to mastery. We chat with entrepreneurs, experts in the mental health and business arenas, and successful private practitioners to give you the tools needed to make your dream practice a reality. Visit theprivatepracticestartup.com for awesome resources, free trainings, and so much more. Here are your hosts, Dr. Kate Campbell and Katie Lemieux.
What is up, Startup Nation? We are back again with another episode of the Private Practice Startup Podcast. I am one of your co-hosts, Katie Lemieux, here with my other co-hosts.
Hey, everybody. We're back again for another episode. It's Dr. Kate Campbell.
Hope you guys are doing well and having a fantastic week or weekend whenever you are listening to us. And we really hope that you joined us for our podcast last week. So if you're completely new to us and this is your first time listening, we wanted to welcome you and say thank you. We have a special gift for you. If you head over to our website, privatepracticestartup.com, head over to the resources tab and look for the A to Z cheat sheet, essentials for building and growing your dream practice. We want to give that to you as a gift. And if you're a longtime listener, we wanted to say thank you. We appreciate your listenership. And we would love for all of you to join us in Facebook. So just look for the Private Practice Startup Group, ask to be part of that, and we'll hang out with you there. And we also wanted to thank our sponsor for today's podcast. Our sponsor is Brighter Vision. So Brighter Vision custom designs websites specifically for therapists. They have a really cool model where you pay $59 a month. Most often when therapists are getting into practice, a website can be just another expense. Well, here it's not that expensive, and a website is definitely something that you need to have. So if you're interested in the possibility of Brighter Vision creating your website, just go to our show notes page and the link will be right there. You will get 1 month free to start off with. So without further ado, our podcast guest today is Suzanne Docobo, and she is a CPA. She'll be talking to us about tax strategies for private practitioners. Welcome, Suzanne.
Hi, ladies. How are you?
We are doing well today.
Yes, we're doing well. And we're so excited to have you here because we polled the audience and got specific questions about what it is that they most want to know for this topic. So it will be very fitting for their needs.
Okay, great.
Yeah. So tell us what led you into the business you're in now.
Well, I'm a CPA. I've been a CPA for over 12 years, specializing in tax. I think I was one of those geeks that really like numbers all growing up. So I know how much people despise numbers. And it was just something that I really enjoyed just getting into and helping small, medium-sized businesses to make taxes less stressful. And I don't know if the right word is fun, but a little more fun than they would be.
Awesome. I am definitely one of those people that does not love numbers. So I am so grateful for people like you in the world who do.
And Suzanne, I think the audience would love to know, you and I, we're actually friends. And I know that we were talking this week and you had said that you really wanted to actually be a therapist.
Yeah, actually, originally I wanted to be a therapist growing up. My dad kind of talked me out of it. He thought that, I was so good with numbers, I had a knack for it. But yeah, I actually took sociology, psychology classes in college, and I really enjoyed that. So you guys have my second career, I guess, going on over there.
That's awesome. Very cool. What would you say is the best advice that you've received that relates to building a business and being in entrepreneurship?
Honestly, I think the best advice is really to listen to those who have done it before and learn from them, and really never to give up and just persevere through. Because I think so many young entrepreneurs, they get discouraged and they give up really, really before they can reach their full potential. And a lot of times failure is the path to success. So I'd say perseverance, don't give up, and do your homework.
Well said. So let's just jump right into your topic, tax strategies for private practitioners. So share with us what the number one subject area is that you want to talk about today.
All right. Well, I think that when people get into private practice for the first time, especially those that are, into or normally used to W-2 jobs, they don't really realize, what they need to do next. And so some of the common myths that people don't realize once they have their own business is that they actually really need to start planning for tax strategies, such as setting up a certain type of entity that would protect them in their business. So for example, if you just start off in private practice and you don't set up anything, you're really taxed as a sole proprietor And in that circumstance, you're still going to be able to deduct everything you would if you were set up as an LLC or an S Corp, which I'll talk about later. However, you have no liability protection that separates your business from your personal activity. So God forbid something was to happen and you were to be sued for the business, you don't have what they call corporate veil to protect you, and you can actually be sued for your personal assets. So anybody that is getting into any kind of type of business, self-employed or other, they're going to need to set up some sort of LLC, S corporation, or whatever's best for their practice, just for that liability protection.
I'm so glad you say that, because Kate and I always err on the side of caution and always are consulting attorneys. And I think a lot of times therapists get into practice and, I've even heard it like, oh, well, I don't need to incorporate, but you do, because it does protect, and it's not protection for today. It's protection for, you don't know what's going to happen from today on forward. And so it's just better to be protected.
Absolutely. And in most states, in order to set up to have an LLC or an S Corp, it only costs you a couple $100 a year. I mean, the initial setup might cost a little more, but I mean, to me, that's a very cheap insurance. So,
I would agree.
think so I think that's important.
Yeah, the peace of mind is definitely important.
So we also had some questions from Startup Nation regarding entities, but before we did that, I wanted to know if you wanted to share a little bit more about the specific entities.
Yeah, I can share a little bit about the entities. Everybody pretty much has heard of S Corps. They hear about that, or sub S, subchapter S. It's called a lot of different things. There's also other entities like C corporations, LLCs, LLPs. So you can get really complex really fast. So let me try to keep it simple. When you're in business, you really should be only one of two types of entities. Now, for your listeners, I think the best type of entity would be an LLC, and I'll explain why. An LLC, it obviously has that corporate veil protection that separates you from your business and your personal for the liability reasons, but also it has a lot of flexibility. So an LLC for legal purposes, a single member, one owner would still file a Schedule C and would have income and deductions and be able to write off lots of things that we can discuss later. But it also has the flexibility to become an S Corp at a later date when that actually becomes beneficial. So I can explain a little more of that because there's different tax implications of each entity.
Yeah. Will you talk about the benefits? Because I know that's actually happened for me as I began to make more money, is that my accountant said, we really need to, file you. Is that the correct word? As an S Corp or yes. Identify you. I'm not sure what the exact tax word is.
Yeah. So basically, any legal entity is going to be a separate legal entity from yourself. The biggest difference between just having a single owner LLC and having an S Corp is what is called self-employment tax. Self-employment tax, it sounds like a really big fancy word, but really it is another word for payroll taxes. So when you are a business and you're a single member LLC or a sole proprietor, you're going to pay income tax just as you would in any entity, but you're also going to pay an additional 15.3% in self-employment tax, which is really Social Security and Medicare tax, the employer portion and the employee portion. Okay. So the difference between an LLC and an S Corp is an S Corp doesn't pay self-employment taxes. Okay. So it's not subject to that in additional 15.3%. However, you have to take some payroll. So let me give you a layman's term explanation so that way people can really understand what I mean. Let's say you have a business and let's say, you have revenues minus expenses, and after you write everything off, you net $100,000. Okay. So you make $100,000. You're going to pay income tax no matter how you're set up as an S corporation or an LLC, regardless. Okay. But if you are an LLC, you're going to have to pay 15.3% in addition on the entire $100,000 of your net earnings. Whereas if you are an S Corp, you don't pay that 15.3 on the entire 100,000, but you can take a payroll, a reasonable salary. Let's say your reasonable salary in your circumstance is 35,000. So then you pay that self-employment tax. It's really payroll taxes on the 35,000, but you save that 15.3% on the difference. So in that particular example, 65,000 times 15.3% would be about how much you would save in that example. So you really have to do a cost benefit analysis. And one of the reasons I really like LLCs is that, let's say you're just starting out, right? And let's say you're not really making that much yet. You might even have a loss in your first year if you have a lot of expenses. Later on, a few years later, when you start becoming really profitable and you do the cost benefit analysis, you can make that election with the IRS at that time. So you could be an LLC for legal purposes and an S corp for tax when you're ready, and then you could start payroll, and then you start that benefit when you're ready.
So I wanted to, and it's almost interesting because I feel like we almost kind of answer this, but we can summarize. So Richard Tift, one of our listeners from Richard Tift MA, he asked, what are the advantages and disadvantages of going from a sole proprietor to an LLC or sub S? So you said sub S is also called S Corp. And I think you answered at least one of those in regards to the liability and protection. And then you're also answering this. The second part is really in regards to taxation. As you begin to bring in more money, is the ability to save on self-employment tax. Is that correct?
Yes. So the difference between going, there's no real tax disadvantage to going from a sole proprietor to an LLC or an S Corp. There's only an advantage for legal purposes and for tax strategy. So basically, yes, so the S Corporation will have a advantage by being able to avoid some of the payroll taxes, which is also known as self-employment tax, by taking a lower salary than your net earnings.
Gotcha. Very good. And it's interesting because Andrea Brandon also asked a very similar question. So let's go on to the second subject area regarding the record keeping methods.
Yes. So there's a big myth that people think, my accountant handles my taxes once a year. And that's fine and dandy when you're a W-2. But unfortunately, when you're a business owner, that really leaves you open to a lot of liability and really not knowing how much you should pay on a quarterly basis, right? So when you're self-employed and you have income, you're required to pay the IRS 4 tax payments a year on a quarterly basis. And to do that, I suggest for people that are just starting out, I actually have a spreadsheet I'd be happy to share with you that maybe you can share with the listeners, where you can just track your expenses on there and keep it really simple. Some people, they might start having a lot more expenses as their practice grows. They might have more going on. So for those particular individuals, I would suggest QuickBooks. I prefer the desktop version. I do know there's also an online version. So it's really just a personal preference as which method is best for you.
Nice. Yeah, it does make a big difference when you stay on top of it and stay organized. And I've used QuickBooks. I like QuickBooks a lot. And I've also used Wave Accounting, which is a free software as well. And that's a good resource too.
Yeah, and Sylvia Echevarria from Alma Therapy Institute asked that specific question. So she was wondering what you recommend in regards to bookkeeping and accounting systems. So you're recommending QuickBooks. And she also asked, how do you keep up with quarterly estimated taxes and end of year tax filing?
Well, it's definitely important to communicate with your CPA when you're a business owner throughout the year and not just once a year at the end of the year. So most CPAs will go ahead and do an analysis of where you are on a quarterly basis so that they can estimate how much you should pay to the IRS. So I would suggest that, you have to talk to your CPA because everyone's in a different bracket. But as kind of like a baseline threshold, I would say 25% of your net earnings on a quarterly basis. And there are systems where you can actually mail in a check with a stub, that your CPA should be able to help you with. Or there's a system online called EFTPS.gov where you can actually sign up. And I find that the easiest way because I'm very techie. So that's how I pay my quarterlies online, just by logging in and making the payment there.
And isn't it also true, like if you have payroll through your accountant or something like that, or some type of payroll, that they can pull some of those deductions for you?
Yeah. If you have payroll set up, if you're set up as I'm assuming you're referring to a subchapter S corporation and you have payroll, your accountant can help you to determine how much payroll is appropriate for you to take and adjust your federal withholding to cover some of your income tax liability at the end of the year. So that's definitely something that you should discuss with your CPA.
Good advice. And Sylvia also asked, is it absolutely necessary to have an accountant or CPA take care of taxes?
Oh boy. Yes. That's a question I get a lot. I would say if you are just have a W-2, you have nothing else going on, go ahead and use TurboTax or something or some other software like that. Now, the minute you have a business, the minute you have different deductions and different things going on, I definitely think a CPA is worth their weight in gold. You're going to miss deductions. You're not going to know all the tax law changes, all the nuances. And really, you're kind of doing yourself a disservice by not using a CPA when you have a business. So I definitely recommend you not trying to do this on your own, pulling your hair out, trying to figure this out, and definitely a professional who, has got experience in your field and can really help you out to minimize your liability.
And I can't agree with you enough. I think this is really important. And if, everyone needs to really think that taxes are actually one of our biggest expense. And tax law was really written to help businesses and to stimulate the economy. So like Suzanne said, is just in our field, I don't know about you guys, but there's not really a good way to keep updated on the laws and stuff like that. But we are the people who most know the laws and rules in our field. And so an accountant or even a tax attorney are the people who are going to know these specific things, and they're going to actually help benefit you. A lot of times I think people think like, oh, I got to pay my accountant, I don't know, $700, $1,000, but you don't know actually what they're going to be able to save you. So it is really important to find an accountant that you're comfortable with, one who will take your calls, answer your questions, sit down with you, explain things to you. It's so important having a good accountant on your side as well as an attorney if you have legal matters and issues. So
Absolutely.
That answer is yes, find an accountant.
Yes, find a CPA. If you don't have a good one, you can give me a call. I'm happy to help.
So let's talk about our subject area number 3, the tax strategies and planning for the self-employed.
Okay. So one of the things that I wanted to discuss is many years ago, I always get these questions, is the home office deduction a red flag? And the answer to that is not anymore. So, back 25 years ago, when more people weren't working from home, the laws weren't really conducive to having a home office. But back in 1999, the IRS actually changed the law and expanded the definition of a principal place of business to include offices used for administration or management activities. And they broadened the definition to allow home offices. So if you work from home and that's your primary place that you work from, or even if you have an administrative office that's separate from your sales office, you can definitely deduct home office expenses on your tax return, and it's not a red flag.
And see, did you guys know that? Was that general knowledge? That's exactly why you need an accountant. I like how you whipped it out there. Would you say 1999 that came into play? That's awesome. So tell us a little bit more about some other tax strategies and planning for self-employed.
All right. Well, another thing that obviously I mentioned before that, get with your accountant on a quarterly basis. You should be paying estimated tax payments throughout the year so you don't get hit at the end of the year. The other thing I would say is, people have a lot of questions. They're always asking me about their vehicle deductions and stuff like that. And people will call me all the time and say, oh, should I buy a car? Or should I lease a car? And, the answer to that is actually a financial decision for you. What is better for you, buying or leasing? That's a personal decision. Either way, you're going to be able to deduct your car if you use it for business, regardless of whether you lease it or whether you buy it. So it's just a matter of whatever's better for your pocket, I would say.
Great. And Darius at Darren Wellness, he was asking a lot about the home office thing. And so in therapy, we do teletherapy now, and that's really an advancement in online counseling. And so he was asking if he does teletherapy from home and paperwork at home, can this provide tax benefits for his mortgage?
Well, tax benefits would be really writing it off through the business. With the mortgage, you already write off your mortgage interest on a Schedule A. But when you have a home office, you're actually able to write off a percentage prorated based on the square footage of your home office divided by the usable square footage of your home. So the usable square footage would actually exclude the garage. It would exclude hallways. It's really just the usable space, which actually increases your percentage. And then you can write off a portion of your mortgage interest based on that percentage. And then also any other expenses you have, whether it be cleaning and maintenance. Obviously, you're going to have electric, utilities, internet, other things. So you can write off all those things from your home office, generally based on the square footage. There's also another method. Some of my clients, they don't like to keep all the actual expenses. So the IRS a few years back came up with what's called the net square footage method. And based on the net square footage of your office, there's a chart and you can get a deduction based on that square footage.
So what you're saying is you should make your master bedroom now the office so you can write more off?
I don't know if that would count as a home office. So that's interesting that you say that, because one of the rules is that the home office needs to be regularly used and exclusively used for business at least 10 hours or more per week.
Interesting. And, I just read, I can't remember the book right now, but it talked about like writing off meals, and meals have to be intended to actually talk about how to create and make more money to be able to be written off.
Yeah, you have to have you can't just write off any meal. I mean, there's rules for travel, there's rules for meals, there's rules for client gifts also. For meals, it needs to be some kind of context. It doesn't have to be necessarily a client, or it could be somebody where you're just doing research, where you're just having a conversation about your business. So it doesn't necessarily have to be a specific person, but there has to be some business discussion or content during that meal in order to write it off.
I love write-offs. We have another question from Martin Parcher, and if I botch anyone's name, please just excuse that. So Martin asks, I just set up a PA, and he's an associate in a private practice to which he travels in one of his 2 cars most days to counsel on a 1099 basis. He uses his home office to schedule patients, keep finances in shape, respond to email, and do patient research. This often before he goes to treatment sites and after. Can he deduct his car payment and other travel costs and deduct part of his home costs?
Okay, so to answer the question, yes, but it isn't as simple as writing off a car payment, right? So for auto, there's actually 2 methods of writing off, your car, and one is the mileage method and one is the actual expense method. So when you do the actual expense method, you're going to keep track of everything to do with business for gas, repairs, insurance. If you lease the car, your lease payments. If you're financing the vehicle, it's only the interest. And then the business expense would be the percentage that you use for business. And that's what you deduct on the actual method. Okay. If you choose to do the mileage method, you'd also need to keep track of your miles. Just full disclosure, you should keep track of your business mileages anyway. And in 2016, it was 54 cents per mile. And you can write off the business miles that you use during the year. So the IRS actually doesn't like you to switch back and forth between the methods. They really like you to pick one and stick with it per business. So it really just depends on how much you drive. So for example, realtors, I have a lot of realtor clients. They drive a lot. They're driving every day. So the mileage ends up working out to be more beneficial for them usually. But other people who aren't driving as much, maybe the actual expenses is actually better. So what I would say is, kind of see which one's better for you. Make sure you keep your records. If you need to keep an app to track your mileage, there's lots of apps out there. I think one of the most common ones is Mile IQ. It's only like $4.99 a month, and it's very easy to use. And then you have a great record at the end of the year that kind of shows exactly what your business miles are for your CPA.
Nice.
That is good. We have another question from Ada. She says, I'm accustomed to my W-2 earnings as a full-time clinician in agency practice. However, as a part-time practitioner and sole proprietor, how much taxes are going to be deducted? What percentage should she keep aside and where to send them to? Which I think we talked a little bit about, but it would be great for you to summarize that.
Okay. So it sounds to me like she has a W-2, but then she also has a 1099. Would that be accurate in her situation?
It looks like it. I don't want to say yes or no. Maybe she has her own, she said part-time practitioner. So I don't know if she has her own private practice or she is working in someone else's.
Okay, well, I'll assume that's the case. So basically, everybody has a different tax bracket, and the tax brackets are graduated. So, the first 10,000, you'll pay 10%. And then above that, the next bracket, you pay 15% and so on and so forth. So everybody's in a different tax bracket. So that's why I always say, I defer to say, talk to your CPA about what bracket you're in so you know exactly how much you should withhold. I give a base threshold about 25% of your earnings through your practice, your private practice of your net earnings is kind of a good baseline to start with, until you kind of get some better information from historical or from your CPA. And then remit that on a quarterly basis to the IRS through, like what I said before, EFTPS.gov is a really easy thing. You sign up, they mail you a PIN number within 10 days, and then you can pay them online, and it's super easy every quarter.
Awesome. Well, I know I could talk about taxes for a while. And I know one of the things that I'm taking away from this podcast today is, not that I didn't know this before, but for those of you listening, especially like what Suzanne said, it's if you're a W-2 employee and that's it, okay, great, fine. But if you're not, hire an accountant, find someone who's really good, because they're going to actually help save you money in the long run. So that's what I want our listeners to get out of today. But I'm wondering what you would like our listeners to get out of today.
Well, I think you're right on, Katie. I think, once you have a private practice, there's so many people. I'm even going to talk a little about my husband. When I first got with him and, I said, "Oh, who does your taxes?" He said, "Oh, I do them with TurboTax." And I kind of laughed, I said, "Okay, well, I'm going to do them this year, So I did his taxes and he just couldn't believe. He's like, "Oh my God, that's legal? You can write that off?" Like, yes, that's absolutely legal. And you're losing these deductions because you don't even know what you can deduct. So he was in shock and awe. Needless to say, no more TurboTax in our house. So,
well, you are TurboTax.
Yeah. So I would say, yes, definitely get a good CPA. Definitely make sure that you have some kind of legal entity set up. I recommend for most of your listeners an LLC because of the flexibility I mentioned before. And just make sure that you don't wait. And one more thing I didn't mention about record keeping. We understand that a lot of times you're not always paying everything out of your business bank account, which you should have if you have a business. So I'd say get a credit card, even if you don't have it yet in your business name. One credit card that you use for business that has an annual summary statement at the end of the year, because there you go. You have a whole record of your whole year in one place that you can give to your CPA at the end of the year. And it just makes your life a lot easier as far as record keeping goes.
That was a good ninja tip. We appreciate that. So, Suzanne, you've been a great wealth of knowledge. And I just want to say, as an accountant and sometimes therapists and lawyers, that this should just be for educational purposes only, not necessarily exactly what you should do. You should definitely ask your own accountant. And that's really important because all of you have very specific special needs. And it really should be discussed with your accountant who really knows the history of your taxes and things like that. And if you don't have an accountant, find one, or you can actually reach out to Suzanne if you really enjoyed her on the podcast today. We're going to add her information to the show notes page. So next week, we want you guys to join us for Amanda Patterson. So Amanda Patterson is one of our local friends and colleagues here in South Florida. She's been on our podcast before talking about social media. I think that was like episode 5, I believe. Yeah, oh my gosh, in the early days.
5, way back.
But she's coming back and she's going to be talking about the importance of business plans. She's actually been meeting with people and doing live workshops on business plans, but she's going to give you guys some tips on the essentials and why it's important. So Startup Nation, again, we want to make sure that we keep delivering good stuff that you're asking for. This podcast was brought to you because of your request for taxes, and what perfect timing. Don't wait until April 14th to get your stuff to your accountant. Start now. We're going to be releasing this probably by the end of the year or right at the beginning of the year. So you'll grab this information and make some plans for either the following year or the current year. But make sure you check out the show notes page for all the tips, resources, and giveaways. Suzanne had said she's going to share with you guys her spreadsheet to track expenses, so you want to grab that. We would love for you to subscribe, rate, and review right on iTunes. Let us know what you think about the podcast. We do this for you, and you guys continue to inspire us, inspiring you from startup to mastery. Have a fantastic day.
Well said, BP. Bye, guys.
Bye.
Thanks for joining us on The Private Practice Startup. Visit theprivatepracticestartup.com for awesome resources, free trainings, attorney-approved private practice paperwork, and so much more.